All right. Hello, everyone. Please let me know if you can hear me, if you can see me, if everything is all right on your side. How is everyone doing? How is everyone doing? Is everyone having a great weekend? How is everyone's trading this week? Very happy to see everyone. Yes, perfect. Hello, Juan Jose. Hello. How are you doing? Pets lovers, love to see it. David, Elias, Hassan, nice. Let's see. Hello, Ketan. Muat, if I hope I pronounce everyone's name correctly. Nice shirt, thank you very much. Hello, D Capital, VR, Bart, how are you doing, sir? Andrea, big ass on Discord, nice, very nice. Hello, Robert, Frank, Mohammed, Raven, Ismail, love to see it. Let's see, the bear keeps showing up. It means the market is still bearish. Yeah. Or I'm trying to jinx the market. I'm trying to say it's bearish, but it's going higher. Anyway. Hello. Hello, Kevin. How are you doing, sir? Dennis. Clarson, always with the reminder, make it quick, please. I'll try my best. No worries, box cutter. No worries. Hello, Liliana. Gabriel. Love to see it. First of all, I want everyone to let me know, because you see, we only have one thing on the to-do list today, and that is forecast. Of course, some things need to be added. So what are we going to talk about today in this live stream? Feel free to give me any suggestions that you might have. Feel free. I see already, Steph, did you take a trade last week? We can add that one, because I took a trade. The trade I took right there. What else? Transition of order flow. I see market structure. The crosses. Okay. Lot size. Let's see. Psychology. What else? Feel free to keep them coming. What are we going to talk about? Entry using token rejection. Okay. Fair value areas. That's a good one. Fair value areas. That's a nice one. Those are quite important, in my opinion. Let's see. Commitment of trade. I don't really use commitment of trade report anymore. I used to, but arguably not anymore. Liquidity. We can actually talk about liquidity as well. It's quite an interesting topic. Liquidity. All right. Let's see. Bias. It's a good one. We'll stick to these three for now. So we have the trade, we have a fair value area, and we have liquidity right there. I like to think that they go quite hand in hand, because the trade I took also involves fair value area and liquidity right there. Don't be upset, because every question you do have about the topic that you did mention, feel free to let me know, and we can also go over that. So we'll go over as much as we can as well, no worries. And we can also add after we've already gone over those things. But first, let's start off with the forecast right here. Let's see. Let's dive into it. Let me see if my face is not in the way right there. Okay, like we always do, we start off with the economic calendar. We are coming from a week where we had CPI last week. Now we are seeing a lot less disturbance in price action right here for the coming week, for the upcoming week, which is great to see overall. And the reason why that's great to see is because then we can expect, and I want to keep the expectations low, but we can potentially see a little bit more consistent volatility. We see for the US dollar, a bank holiday on Monday right there. This is important to understand, because then oftentimes that Tuesday can act as a Monday. So for me, the real volatility comes in a little bit later during that week, potentially the end of Tuesday, Wednesday, Thursday, and that Friday right there. Those look very interesting in my eyes. So far for 2025, this is arguably the best economic calendar that we are seeing so far. Again, does that mean that we will automatically see great price action? Absolutely not, because the price action still has to agree with it as well, right? Very important to understand. So don't get your hopes up. Very important. Keep a neutral, open mind. Okay, let's move on to the chart right here. What are we seeing on the dollar itself? So we are currently still struggling with this resistance area. And the resistance area that we are talking about is this nested fair value area right there that we are running into. And it's a bump in the road. Overall, I need you to understand for the coming weeks, I'm still bullish on the dollar. So nothing has changed in that regard. Potentially, we are seeing a consolidation to then eventually continue higher on the dollar. So what I would like to wait for on the dollar right here is to see if this candle right there, that Friday that we have, if that potentially Monday, Tuesday, whatever it may be, if we can follow through for this week to continue higher towards this high right there. If that does not happen and we do have shorts, so for example, we turn bearish throughout the week, then I personally am not that interested in whatever price action wants to do at that moment in time. I will personally, on the dollar, only really look for long opportunities right there. Also depends on the trading plan, of course, but I personally prefer longs over shorts at this moment in time on the dollar as well. If we take a look at the 4-hour, we can see that we currently don't necessarily have a very clear fair value gap or anything supporting the ID, which we can continue higher from. If we do get that eventually, that could be quite interesting to push price higher towards those highs right there. But be aware of the fact that we might create somewhat of a consolidation. That is very important. So again, how can we spot that consolidation? Well, how can you spot this consolidation, for example? Is the struggle to create fair value gaps, is the lack of respecting fair value gaps, and is overall ugly two-candle rejection. So those are three things. If you have those three things, then we have a consolidation right there. Very important to understand. So right here, overall bullish throughout next week on the dollar as well. But being aware of a potential consolidation and that we might really struggle to continue higher right there. On Russell, let's see. So this is actually something that we're going to talk about just a little bit later on as well with that fair value area and that liquidity, because this is important to understand. This is unusual context, what we're looking at on Russell, potentially. And what I mean by that is, for example, what do we have here? This area is a fair value area right there. And this fair value area right here is what we are currently disrespecting to create unusual context to potentially target this liquidity in the form of that high right there. That's what I would like to see on the indices at this moment in time. Same for ES, for example. We also have the fair value area right there. I would like to see if we can push higher from a 4-hour, a 1-hour fair value right there on that Monday as well to continue higher, or Tuesday, to continue higher towards that fair value area high right there. That to me looks quite interesting. Now, once that happens, then for example, ES and NASDAQ right here, what are they very close towards? An all-time high. What is all this? This is all build up liquidity right there that we could be targeting right here. And I say could be because nothing is guaranteed, that we could be targeting to target that all-time high afterwards right there again. That to me is very interesting. And if that does happen again, we do start respecting those fair value gaps here. That is very interesting and a very clear bias. And when there's a very clear bias in the market, I believe we should try our best to at least profit from it as well. Let's take a look at NASDAQ right here. Very similar, but NASDAQ we see is a little bit weaker. How do we know it's weaker? Because the rejections from these resistance areas right here are stronger, simply said. So what we have right there is NASDAQ can also continue higher, but I would prefer ES at this moment in time if we were to look at longs on the indices as well. YM also looks quite interesting. We do reach into, I believe, a weekly fair value gap right there. Not necessarily expecting lower prices from it, but it is a resistance area again. So keep that in mind that we might struggle a little bit right there. DAX at an all-time high, not that interesting to me. At least not for new positions. So if we take a look, so what is the objective? If the dollar clears up, then ideally we would like to trade some of the majors. So AU, EU, the ones we are seeing there, GU, New Zealand dollar, US dollar, etc., etc. Then the objective is to find, among the majors, to find the best opportunity. And what is the best opportunity? Very simply said, well, which one is the strongest or which one is the weakest? So if we're looking at longs, we want to find the strongest one. If we are looking at shorts, we want to find the weakest one. And that's going to most likely be the best opportunity. That's what I want you to pay attention to. And this is not rocket science. as in a lot of concepts that we use are very logically applicable. And what I mean by that, when we talk about strength and weakness, which one is the best to trade, a lot of it is just logically speaking. So for example, Australian dollar, US dollar, is this one quite strong or quite weak? And why is that the case? Well, I would argue it's quite strong. So if we do want to look at shorts right there, it's not necessarily the best opportunity. Why? Because we created a daily bullish fair value gap. If you compare this price action side by side right here, let's see, side by side with something like GBP US dollar, let's zoom out. Then which one would you argue, based on, if you compare the price action right here, which one would you argue is weaker and which one is stronger? GU right there doesn't have that daily bullish fair value gap that Australian dollar US dollar has right there. Meaning that when we do create a retracement, Australian dollar US dollar seems to be quite strong in comparison to GU right there. So GU is a lot more interesting for shorts because it's weaker. Now, it's very important to understand next to that, if we do turn bullish all of a sudden right now, then Australian dollar US dollar becomes more interesting. Why? Because it's stronger. So you always, essentially on your desk, wherever it may be, maybe on a whiteboard, whatever you want to have, on your trading view chart itself, wherever. Ideally, you want to always have a list. Okay, I know for this upcoming week, Australian dollar US dollar is stronger than GBP US dollar. That tells you that if you want to look for shorts, you should look at GBP US dollar. But if you want to look at longs, you should look at Australian dollar US dollar. So you can always react. Very important. So here, Australian dollar US dollar, at this moment in time, not that interesting. If we compare it to EU right here, then we see EU is also quite strong because we also have this daily fair value gap right there. In comparison to Australian dollar US dollar, we could argue Australian dollar US dollar might even be a little bit weaker because AU, Australian dollar US dollar, trades back into that fair value gap. EU does not. So EU is quite in the middle right there. And the reason why this is important is because when you have bullish plus bearish, and this is arguably one of the best ways I can explain it. If you have bullish plus bearish signs, then what does that mean? That means that we are in the middle of being bullish and in the middle of being bearish. So for example, let me make this more clear right there. Let's see. You want, if you want to look for buys, quite obviously, you want to look for bullish price action right there. If you want to look for shorts, you want to look at bearish price action. Now, you don't want it to be in the middle, because what is in the middle of being bullish and bearish? So not bullish, not bearish, that's a consolidation. That's where you have 50-50 price action. So if something is not bullish, it's not bearish, then it's 50-50. So that's why you want to look, and this is quite logical, you could argue, but this is why you want to look for always the strongest and the weakest pairs right there. Where EU is closer to consolidation, GU is closer to a bearish trend right there. So what we see right here is that we are respecting this resistance area right there at this moment in time. Again, not expecting it to hold, but it is a resistance area. It is a bump in the road if we do want to continue lower right there. So we can expect price action to stall a little bit, to stop. The next resistance area that we have is this low, the next target, and also, of course, this low right there. Currently, we see, based on candle signs as well, is that we are respecting this fair value gap up until now. And we do have this new expansion lower right there. On the 4 hour, we see that we have this 4 hour value gap. It's not the nicest delivery, don't get me wrong. It's not like it's the perfect price action or anything like that. But if we can create a new 4 hour value gap, new 1 hour value gap to continue lower from right here, with these fair value areas as well, to then something similar. Again, we have to react, of course, what the narrative will be. So then something like this, that could be very interesting for this week if the dollar does decide to continue higher. Again, very important to understand. Reminder of what we mentioned in the beginning. We need to understand if the dollar is going to consolidate, the GU, of course, is also most likely going to create somewhat of a consolidation. So it all, and this is why you see the dollar is at the top of our forecast list, because it all is based around the dollar right there. Very important to understand. All right, New Zealand dollar, US dollar. We see as well a little bit weaker than AU and EU, but stronger than GU. So GU, as of now, to me, is the most interesting pair to trade across the majors. US dollar, Canadian dollar, we also see actually quite a strong, and again, now we are switching to that bullish side, right? The US dollar is in the beginning of the ticker name. So US dollar, Canadian dollar, US dollar, CHF, we're looking at potential longs. US dollar, Canadian dollar, right there, quite strong. We have this expansion phase. This right here is now a fair value area right there. And this fair value area, we can create a fair value gap overlapping on that Monday potentially to then sting into it on that Tuesday to continue higher from it. That could also be quite interesting. If we compare this to US dollar CHF, US dollar CHF is weaker. US dollar JPY is also a lot weaker even. So if we are talking about strength and weakness perspective, US dollar Canadian dollar is the most interesting for longs right here. GU is the most interesting for potential shorts at this moment in time. So GU and US dollar Canadian dollar are quite interesting majors heading into this new week, if that makes sense. Again, that is still a lot to do with reacting because they can be interesting right now, but Monday, everything all of a sudden could change and it could be upside down and nothing is interesting anymore. But you should still be reacting. Very important to understand as well. Let's take a quick look right there. So we still have this target right there. I believe it's on the daily, if I'm not mistaken. Yeah, let's swing high on the daily right there that we can still target. All right. Move on. Let's see. Gold and silver. What do we have? Very similar. And the trade we're going to go over is also on gold. I took a trade on gold right there throughout this week, which was, in my opinion, one of the more high probability trades this week. And it was my first actually high probability trade also this year, arguably. And right here, what we see on gold, if we compare to silver, if we are looking at longs, then can you now start to notice why gold is more interesting than silver if we are looking to buy it? Now, if we are looking for shorts, so let's say the market turns bearish right here, then silver becomes more interesting than gold. But for longs right now, gold is more interesting. So what we saw on gold is that we have that Monday, quite a large rejection. At that moment in time in the MMT, I mentioned as well during the forecast, I mentioned I want to take a step back because I'm not too certain what we will do. I don't want to look for shorts. I would rather wait for it to realign bullish again. How do we know it realigns bullish again? Well, when we are not respecting premium raise. So these right here, bearish value gaps, we see. And again, those concepts, every concept that we have essentially within the MMT and within the YouTube channel as well, all of them go hand in hand. It's quite important to understand because when they go hand in hand, what you see right here is this bearish fair value gap. Okay, well, if we want to be bearish, we should be respecting that. 2 candle rejection. First candle is not a rejection. Second candle sweeps the previous candle high to potentially continue lower. What should the third candle do if we want to continue lower? It should be a new expansion phase right there to continue lower. That should happen if we want to be bearish. The reason why I like to look at it from a perspective that I don't want to see. So I want to look at bullish price action. I want to see bullish price action, but I'm looking at it from a bearish perspective because that allows me to keep an open mind. If I know this bearish side right there is not playing out that I don't want to be a part of, perfect. Then I know we're going to be bullish again. And then I can look to potentially get involved. So right here, I understand what should happen if we want to continue being bearish. Next candle should be a down candle. What happens? It doesn't happen. We take out the rejection. The 2 candle rejection fails right there. This 2 candle rejection fails. That is what we sort of know as a dominoes effect in the MMT. Essentially saying that we can look to potentially target this liquidity. Now we do have some resistance areas that we are still running into right there. Once we are free of those, what do we see? We continue higher right there. In this area, that's where my trade ID was as well, which we'll get into. Let's first finish the forecast right here. Now, overall, what does this mean? That we have, in my opinion, a very clear target at this moment in time. We might struggle a little bit at the beginning of the week, but higher prices right here, to me, is very likely. This high right there, and then eventually also looking at these highs, and potentially even for the coming weeks, potentially even new all-time highs again. Quite interesting. Of course, that's very early. Let's just stick to next week. For next week, I believe we can continue higher and at least target this high right there. So silver to me can also continue higher, but it's weaker. So why would we look at it? Why would we waste our focus looking at it right here if we are understanding of, well, as long as we are bullish, we can Ideally, look at gold instead of silver. Quite important. Bitcoin, very interesting. Very interesting price action throughout the whole week, actually, right there. So let's break it down. We are coming into this monthly fair value gap right there. We are potentially continuing higher right now towards the all-time high, like we've been also mentioning. It's arguably one of the most obvious moves that we have had in a while right there. Simply monthly fair value gap, continue higher from it to that high right there. Couldn't get a lot easier. Then what we see right here on the daily is that we have this huge, large respect candle. We start to create those expansion phase candles. Then what we see right here, which is important to understand because we mentioned this also during a live session in MMT right here, is that we first, throughout that day, we actually see very bearish price action. So we have a very aggressive retracement in this candle right there. We're coming back into these fair value gaps right there. Now, let me tell you, not a secret, I don't want to make it more fancy than it is this right here is what we call in the world of fair value gaps video, we also discussed it, is an immediate rebalance. And why does that immediate rebalance happen? Because hello, I think we're back now. Please spam the chat, please, to let me know if we are back or not. It was just about to get interesting. It's just about to get interesting. We're back? Yes, okay. It was just about to get interesting. Interrupted my story. Yeah, we were talking about the immediate rebalance right there. So whenever this happens right there, your first assumption when we don't create a fair value gap, because a lot of people that start to get into fair value gaps, when they see this fair value gap is not created, they assume, well, right now we are bearish and we should continue lower. No, it's not true. Because this right here on the lower time frame is what? From that wick high to that wick low is what? That's a fair value area on the lower time frame. So when this happens, an immediate rebalance, we don't create the fair value gap, but we still continue higher. That simply means we are respecting on the time frame below a fair value area and a fair value gap right there. That's all it is. And that is reacting. So now once we notice that, we should react and understand, hey, this can still very well continue higher. There's no reason to turn bearish at this moment in time. So what happens afterwards, we can continue higher. What is the next target? That all-time high. Beautiful price action in my opinion. And if you do want to study something, Bitcoin right here, very interesting, very nice price action in my opinion. Let's see. Crude oil throughout this week, not necessarily the best right here. Let's see. Potentially a weekly value gap that we can retrace back into, but to me, it's not super interesting at this moment in time. And I would rather look at something else if I am being honest. I don't necessarily like it a lot right here. The narrative area is not too clear. The bias that we can continue higher on crude oil, yes. Narrative, not necessarily. Bank Nifty right here. Bank Nifty, we mentioned that we're arguably looking at this low as a next target right here. Throughout this week, we were struggling a little bit. Again, we're in a third candle of this weekly fair value gap. So it wouldn't surprise me if we do see a retracement back into this weekly fair value gap, swing low, the fair value area low, to then continue lower from it as well. If it doesn't happen, and we already created a fair value gap right here, it's a matter of reacting. We create this fair value gap right there. We respect that already. Then we can simply already continue lower from it as well. Important to understand. All right, let's see. We have a few things to go over right there. Very important to understand. And if you do want me to go over a few crosses, then of course, feel free to also let me know. I saw that a few times. If you do have some crosses that you think, let's do it this way. Let's do it this way. We can go over crosses. If you suggest one of the cross pairs, it better be very interesting or a potentially interesting pair. If it's not, then we'll ban you. No. I'm joking. But then suggest me the best cross pairs that you think are really high probability, and then we'll take a look at it. Of course. Let's see, the JPY pairs. It's a smart one, Clarkson. Just naming a group. So one of them might be high probability. It's smart. I see you, Clarkson. No. Let's see. Yeah, for the dollar, I currently at this moment in time am bullish, long term as well. But it wouldn't surprise me if we consolidate, struggle a little bit to then eventually continue higher. I see a lot of GBP/JPY. All right, if it's not interesting, I know where to find you. I know where to find you, okay? Hey, thank you, Don. Thank you, thank you, thank you. How did reality trend surfing impact your trading? Just the mindset a lot. The mindset, just knowing or sort of wiring yourself to believe that it's possible, if that makes sense, and letting go a lot more. So more having that overview instead of getting stuck in to a lot of things, if that makes sense. It's a great question, Don. But that I believe, and I give a lot of credit to that book, because that book, in my opinion, helped me a lot. I've always said it helped me a lot to transform my mindset, etc. So GBP/JPY, okay. Let's see what we have. All right. So the monthly, I personally am not a big fan of the monthly. The monthly is not that clear, but one close, very close target that we could argue is very reachable. The previous month's low. Of course, whenever we are in consolidation, closer targets, previous month's high, previous month's low, it's always something that we can work with. Let's see. On the weekly, what do we have? We're going to be in a third candle. But if I do look at this price action, it is very reasonable that we are already going to continue lower right there towards the target first. Okay, so far so good. Okay, on the daily we actually have we have been respecting, so we have visual evidence that we have been respecting fair value gaps right there. That's good. We are currently rejecting from this swing low right there to potentially retrace back into the fair value gap to then potentially continue lower from it right there. That's not bad. I'll give you that. That's not bad. That is not bad at all. I'll give you that. You have paused right there. That's actually quite interesting. The only thing that I would like to look at, just the confirmation right there. But overall, this is looking quite good for next week. Yes, I do agree. I do agree. That's not bad. That's not bad. All right, then we can do another one. Let's see. We'll stop at the moment when I think the cross, when you suggest a low probability cross pair to me. Let's see. Let's see. Which one? What is the next one? GBP Canadian dollar? Let's see. Gold. Yeah, gold is high probability. Gold, we've gone over that. Yeah. Let's see. GBP Canadian dollar. Hello, daytrader. Good evening, my friend. Good evening. Australian dollar JPY, New Zealand dollar JPY, Euro JPY. Okay. So let me ask you something different then. Which one of the JPY pairs? Let's see if we have, or if I have thought it somewhat correctly. Which one of the JPY pairs is then the highest probability at this moment in time? If we are going to look at shorts, which one of the JPY pairs is the highest probability? New Zealand dollar JPY, Euro JPY, GJ, okay, Canadian dollar JPY. Okay, I see a lot of different ones. Okay. Euro JPY, US dollar JPY. All right. GJ. Okay, we're going to take a look. The book, by the way, I'm not affiliate or anything. You can simply Google it for yourself. It's Reality Trend Surfing by Vadim Zeeland right there, I believe. That's the book. Okay, let's see. Let's compare them. And again, just purely from my perspective, of course. The monthly right here, Australian dollar JPY, does look a bit better than arguably GBP JPY. Also not the greatest right here. Let's take a look. On the weekly, we're sweeping some of the swing highs right there. So if we are looking at a target, we're looking at these lows. On the daily, I don't like this. No. The reason why I don't like this is this retracement after sweeping this swing low is quite heavy right there. If you compare it to, for example, GBP JPY right there, it's not as a heavy retracement. So we see this lag that we have right here, a lot more bearish. There's more bearish intention, where Australian dollar JPY doesn't necessarily have that. So to me, GBP JPY at this moment in time, compared to Australian dollar JPY, is higher probability. But let's see. Canadian dollar JPY, what do we have? Monthly Monthly also not great, but I think that's on a lot of pairs right here. The monthly is not great. We do have that previous month's low right there. Sweeping that high. Had a bullish fair value gap right here that we're recently coming from. That's quite important to understand. We are running this low. On the daily, it's not bad. It's not bad, but I do, again, prefer GBP/JPY overall. We have this daily value gap, but it's a bit tricky. A lot more tricky right there. I do, again, prefer GBP/JPY. So GBP/JPY still, to me, is higher probability. Let's see. On the monthly again, not a great monthly time frame. Let's see what we have on the weekly. Okay. Not bad. It's a little bit further away from the target right there. We do compare it to GBP/JPY again. Then we see right here also has been respecting fair value gaps quite nicely right here. A tinier, smaller fair value gap right there. And arguably the retracements are a little bit more aggressive that we see, which leads me to think again, which makes me lean more towards GBP/JPY still. Also, the closer we are to the target right there, there's not a lot of resistance left. So I personally prefer still GBP/JPY right there. But it's not bad. It's not bad. Don't get me wrong. We're comparing good versus good at this moment in time, right? Euro/JPY. Let's see. What do we have? Well, from a daily perspective, that already didn't look very promising. The monthly is arguably a bit better since we are still in the motion of potentially respecting that fair value gap. On the weekly, running into a weekly value gap at that moment in time, no, that automatically eliminates it. And the reason why is because we're running into quite some big resistance right here. So that to me is not interesting right here. Also failed to create daily value gap. No. GBP/JPY, still the highest probability. After that, I would argue CHF/JPY, but let's see New Zealand dollar/JPY. What do we have? Because New Zealand dollar/JPY has something that no other pair has right here. It swept this high. It came into this monthly fair value gap, a new monthly value gap in recent times right there. No other JPY pair has that. So that is a huge advantage. Now we have this previous month's low, the context low, we've already taken it, essentially. That is also quite important to understand, that there is a bigger reason for a retracement right now. Let's see. Weekly is all right. Daily is all right. My only worry right here, which if we compare GBP/JPY to New Zealand dollar/JPY, I believe and I think GBP/JPY is higher probability than New Zealand dollar/JPY. And the reason, I'll tell you why. If you were to ask me a few days ago, I would have told you New Zealand dollar/JPY. But New Zealand dollar/JPY has reached a major liquidity right there. Whenever we reach major liquidity, it is essentially a weekly swing low right there and a monthly previous month's low. GBP/JPY hasn't reached that yet. So also a topic that we'll get into, that liquidity right there. When we haven't reached that yet, there's still more reason to continue lower right there. So it's an extra argument essentially. So GBP/JPY to me at this moment in time is the highest probability from the JPY pairs. Arguably after that, CHF/JPY, and arguably after that to me, New Zealand dollar/JPY right there. But JPY pairs do look quite interesting in my opinion. So good. I like it. I like it. I like it. Very nice. Very nice. With everyone being super bullish on Trump's that's a difficult word. Could the Bank of Japan rate hike decision on Thursdays rock the week? Could be. Definitely could be. Could definitely have an impact. 100%. It's an interesting thought process actually. Yeah. I'm doing good, Lawrence. How are you, sir? How are you? All right, let's dive into... Oh yeah, I forgot US dollar/JPY, but US dollar/JPY, I think we can all get to somewhat of an agreement that this is arguably the worst one if we are looking at shorts. Right there. So to me, this does not look that interesting, in my opinion. Let's take a look at the trade that I took. So let's slowly start to tick off these boxes. Where did I leave the... Here. The trade that I took right there. Let's go over it. Let's see what we have. So on gold, and the reason why I like gold a lot, even though at the beginning of the week, I did not necessarily like it. And the reason why is because we had a big rejection on that Monday right there. So I wanted price to realign bullish again. We talked about this short time a bit in the forecast. We were not respecting these bearish fair value gaps anymore. We took out all these resistance areas right here. And then only what was left is arguably this swing high. And next to that, these highs right there. Now on the 4 hour, we did not necessarily have a very clear narrative area. And if you're in MMT, you'll know during the forecast I mentioned, I really like gold. It's for me the best one so far, but the narrative area is not clear to me. And after that, we start to clear up the narrative area. So what happened? We had right here a 1 hour fair value gap, perfect 1 hour value gap essentially, nothing wrong with it, created right there that we had to sting into to then respect it, to then continue higher from it. Now I trade what we in the MT call a stick entry plan. It's not necessarily something I discuss on YouTube. It's where I use candle signs to look for my entries. So this to me right here was my entry covering the low, targeting a 1 to 2 right there. It was a very quick trade as well. It was a beautiful trade in my opinion. Afterwards we struggled a little bit right there, but overall really, really great price action in my opinion right there. And it's a great trade, very high probability trade in my opinion. That was a trade. Quite simple if you see it like this in my opinion. But that's also because I'm very picky with my trades. So when the trades all of a sudden look good, then it looks quite simple. But that's because we find the best conditions to trade in. And when you find the best conditions to trade in, then trades all of a sudden look very simple. But the process of getting to the best trades, to finding those best conditions, that is a lot of patience and being very picky with your price action. That's very important. So that's quite interesting, but the thing that I wanted to mention, because there's also a fair value area in play right here and also liquidity in play. Why? Let me show you. So a fair value area, and this right here is an intermediate high. This right here is an intermediate low. So what happened at this moment in time when I took this trade? We were in between an intermediate high and in between an intermediate low, essentially in the middle right there. Now, what we are looking at right here is a future fair value area, meaning if we trade above that high, the intermediate high, we can, like we see right there, retrace back into it to then respect it to then potentially continue higher. That is a fair value area. That's where we can offer that fair value. So this intermediate high is extremely important when you're trading in between those intermediate highs, intermediate lows. Why? It's different than, for example, taking this trade. Why? Because they are similar fair value gaps, right? Why would you take this trade earlier and not this trade afterwards right there? Because they are different. There's a small detail that's different. And that is that right here, we have not taken this intermediate high right there that we are moving towards at that moment in time. Whereas this right here, we are now trading above an intermediate high, trading above that fair value area where we can see a deeper retracement in price action. So right here, this, even if we want to continue lower, and you need to understand this very clearly. We have mentioned this in past forecasts on Bitcoin, why we are currently at an all-time high as well. And the reason why is right here, even if we are going to continue lower, then we are still likely to use this liquidity, sweep it to then continue lower. And if we are going higher, then we are going to run it anyway right there. This is why trading within those intermediate highs, intermediate lows is important. For example, after we retrace back into the fair value area right here, excuse me, then what do we see afterwards? We continue higher and we have this intermediate high right there. Even if we want to continue lower, we are still like to reach that liquidity right there, because then we will sweep that liquidity, use that liquidity to continue lower from it. This is why understanding your context target is so important, because your context target is where price can sweep it to then do the opposite of what you expect it to be. This liquidity is very important. Let's take a look at Bitcoin. Because on Bitcoin, it's arguably one of the best examples that we had in recent times. Well, recent. We've been at an all-time high for quite some time. But right here, when we were around here and we were consolidating right there, and this is all on YouTube for free on the forecast. You can check it for yourself if you want to. You don't have to trust me. But right here, we mentioned that even if we are going to continue lower, we are still likely to first be bullish. Why? Because we need this liquidity right there. There's too many people in a position right there to then sweep it, to then continue lower. And if we are going to continue higher, we are going to run it to then continue higher. So what happens? no matter what we are going to do, and again, take no matter what with a grain of salt, because it all ends up being probability wise. It can still continue lower, but the probabilities are very much in our favor that we are going to continue higher right there, even if we want to continue lower, because then we will sweep liquidity to continue lower from. That's just overall understanding that liquidity story right there. Very important. Very important to understand, in my opinion. And the way this ties into the fair value area is because usually when we take that liquidity, that becomes a future fair value area. So what does that mean? Well, right here, if we take a look at gold, when we take a look at this 4 hour, when we take an intermediate high, it turns into a fair value area. When we take an intermediate low, it turns into a fair value area. That fair value area tells us a lot. Right now, we're arguably respecting it to potentially continue higher and keep on continuing higher right there. That's how far we can retrace. Now, also in times where we do not respect that right there, where we do not respect the fair value area, we have offered a fair value right there to then continue lower. That creates unusual context to target liquidity in the form of that low right there. It's quite advanced. We'll go over a few more examples as well right there. It's quite important to understand. And if you think, hey, what is a fair value area? Essentially, I used to use order blocks, breaker blocks, and mitigation blocks. And I noticed breaker blocks, order blocks, and mitigation blocks, they all come down to essentially the same thing. They're all the same thing. They just look slightly different, but they all come down to the same theory. They're the same thing. So in order to save brain points to focus on psychology, for example, what is really important, etc., to not get distracted by all those different things, I thought, well, if you take those 3 rules and turn them into 1 rule, it's a lot easier. So this fair value area right there, some might see it as a mitigation block right there. Some might see the order blocks that we use. We say that's a fair value area. And the thought process behind a fair value area makes it a lot easier to know what you should do, in my opinion. Again, if you use order blocks, break blocks, mitigation blocks, perfectly fine. That's perfectly fine. Nothing against you, and I respect you the most. But what I believe is when you have a fair value area right here, it's a lot easier to understand what we should do. For example, a fair value area is understanding that above this high, we have only offered one side of the market. So we've only offered buy side right here above this high. Where this fair value area, we have offered buyers a fair chance to get involved, sellers a fair chance to get involved, to then continue higher. And when this happens, we only leave behind this area above that high where we have not offered one side of the market to get involved. So how far can we retrace? Well, if the market is offering fair value, then it will offer fair value at this fair value area, because right there, right now, everyone had a fair chance to get involved. Right here, we have buyers, sellers, buyers, sellers right there got a fair chance to get involved to then continue higher again. And if that does not happen, then you need to understand, because we don't always continue higher or lower from a fair value area, but that still allows you to have an opportunity. Why? Because if we now try to offer fair value, and we have offered fair value right here visually, we try to push higher, we have the rejection, but we don't follow through. Don't panic, because this right here, if we now have fair value gaps running those lows right there, we are arguably looking at, instead of offering fair value, what does the market do? The second thing is taking liquidity, targeting liquidity. So the fair value area low becomes liquidity. Why did we talk about ES, NASDAQ, etc. in unusual context? But why? What happened here? Let's break this down fully, because this is important to understand. Right here, we have this fair value area right there. This fair value area is where, again, sellers got a fair chance, buyers got a fair chance, sellers got a fair chance right there. Now we retrace back into it to potentially offer fair value. Let me use the replay tool just to nail down the thought. We offer fair value because this is the only area where we haven't offered fair value just yet, to then continue lower right there. Perfect. If that doesn't happen, you know what to do. Because right here, what happens? We see, currently we offered fair value. We have this rejection. To get the rejection, we are respecting this fair value area right here to potentially continue lower, right? So what should the next candle ideally do? Continue lower right there. That does not happen. So instead, what are we doing? We take out the rejection high. That rejection fills. So This fair value area, since we are not offering fair value anymore, because we know this area, the bottom of that box, is where we offer fair value. We're not offering fair value anymore, then what happens? The fair value area high becomes the liquidity that we want to target. Do you know or remember in an order flow lag, you have first line of defense, first line of defense, overlapping defense, and you have last line of defense. This is an order flow lag essentially. And in an order flow lag, you want the first line of defense to ideally be somewhat of a fair value gap, then the overlapping defense to be a fair value area. If the overlapping defense does not get respected, then the last line of defense becomes the target. Let me state that again. If the overlapping defense does not get respected, like we see right here, based on candle signs, based on two candle rejection, then the last line of defense is not something you want to trade from. It becomes the target. It becomes unusual context. And people that are already a little bit deeper into MMT, that will be mind-blowing, if that makes sense. And that is very important to understand right there. So this right here becomes a target. This fair value gap is not interesting to trade from. It's not the overlapping defense. It's not the first line of defense right there. This is resistance, a bump in the road to then have a retracement and continue higher from it. Ta-da. That's it. You signed up for your MMT and almost done with order flow module. I'm already seeing huge improvement. Love to see it. Order flow module is a very interesting one. It's the first one. It's super interesting. But love to hear that. Love to hear that. Once you start to get into zero to hero module, etc., then it's super interesting. Keep me updated. Nothing on the indices. Indices cruise, Anthony. Arguably, for me at least, bullish up until this moment. Looking to target this high right there. Especially ES. I like ES right here. So that is fair value area, liquidity right there. There's a lot going into it, but I need you to understand that even though there's a lot going into it, it's all quite logical. And what I mean by that is concepts, they stack onto each other. Hey, this candle science is not just based on thin air, it's based on fair value gaps. So understanding that, and when we then disrespect a fair value area, is based on offering fair value or targeting liquidity. So it's all, you can connect the dots quite logically, at least in my eyes. Some might disagree, but at least in my eyes. I found that I can see daily buys, but sometimes predict the movement a day before. I can see where price wants to go, but don't get the timing right. Is there something I'm missing? Chloe. That's quite interesting. As in, when does it happen? Do you wait for a high time period we sting into? Do we then continue higher? I would need some examples in that. That's interesting. Yes, arguably Mihai. Yes, arguably. Yeah. Hello, Mr. Greetings from Colombia. I love to see it. Wat is weer het grote verschil tussen light en master MMT zoals zero to hero? What is the big difference? Charlie is asking, what is the big difference between light and master MMT zoals like zero to hero? You need to understand. So there's a sort of certain path. So for the MMT or for the YouTube, even free YouTube can completely be enough. And I don't want to force anyone to get into the MMT and it's the holy grail. You need it. But for people that want it a little bit faster, it's essentially, I call it a fast track to profitability because the structure is a lot better than on YouTube. You get more insights. Essentially what we're discussing here is a little bit of the tip of the iceberg. Then light already dives into that a lot more. But light, you're a lot more on your own. So if you like to do that and you like to be on your own study, you do miss a few modules here and there, etc. You don't get the indicator, for example. You don't get the live sessions. You also don't get the psychology live session. Masterclass is where that comes in. So if you want that, another fast track right there is more structure, more insights. I'm in the Discord. I help you. We have support members dedicated to help you. We have live sessions 3 times a week where I'm also in, and we have psychology live sessions. So that's essentially the top of the top, if that makes sense. If that makes sense. Love to hear it. Chi Boogie, I hope I pronounced that correctly. I'm sorry if I butchered that. I'm sorry. Arya was, did we decode the markets? No. No. I don't like to think like that. I don't have an algorithm that I created or anything, and I know how the market runs. All of this is just based on a theory that I know works. So then I build onto that theory, if that makes sense. And I'm not saying this theory is the holy grail. Not saying this theory is the theory that runs the market. I just know it works for me and for a lot of people out there. So that's why it resonates with me, if that makes sense. Illegal concepts. Yeah. I'm a big believer in you should find what resonates with you. If that's simple support and resistance, then that's perfectly fine, of course. That's perfectly fine. And if that's indicators and it resonates with you, that's perfectly fine. Like I oftentimes don't get, and I'm also maybe a bit to blame in that. I can understand that. But oftentimes, even if you trade ICT or whatever you trade, I really couldn't care, if that makes sense. It's whatever makes you profitable. It's us against profitability. It's not us against each other right there and finding amongst ourselves, if that makes sense. Even though I'm also sometimes here and there, oh, you don't need market structure shift, etc. You don't need SMT. But again, if you use SMT profitably, then I'm very happy for you. How did you learn trading? Did you go to college? No. Well, I went to, I studied computer science. So to lay out my story a little bit, I studied computer science. I stopped at the end of my second year because I had the opportunity to play basketball when I was 17 years old in Italy. And that's where I played basketball for 2 years, a little bit on and off because it was during the COVID period, etc. And that's when I really got into stocks. Before that, I got into e-commerce. I ran an e-commerce store. For the Dutch people, you might know it, bol.com. I ran it quite profitably right there, but I wanted more. I had shiny object syndrome essentially in business itself, if that makes sense. So then I got into stocks. I invested in stocks and it went quite well. I was part of the Palantir move, for example, very early on when the NIO, for example, did great, or Lucid, those electricity cars. There was a huge hype around it. And afterwards, I slowly started to get into, hey, how can I trade this daily, or is there something here? Then you start to, of course, get into more of the Forex. I skipped a lot of the support and resistance things. A lot of it started off with the basics, essentially ICT, but quite fast already afterwards, I stopped looking at ICT and I more so did my own case study. So 9 out of 10 things you are seeing here purely from my own case studies. For example, a term like fair value gap, it's ICT, if that makes sense. That's the summary, a quick version of it. 2025 is ours. Love to see it. Love to see it. Let's do it. Thank you, Big Pips. Thank you. Have a good night, J Trader. 6 months of MMT. Now I have 2 accounts of 100K prop firms and I will receive my first payment at the end of this month. Christoph. Love to see it, my friend. Love to see it. That's insane. That's insane. And that's beautiful to see. That makes this worth it. That makes this, that's why I love it so much. Love to see Christopher. And again, that is all I do want to mention. I mention it to everyone who shows me their results. It's credits to you. Jonathan, also, I passed my challenge. That's credits to you, my friend. That's credits to you. And the people who aren't there yet, again, give it time, give it patience. And of course, if the MMT is not for you, then it's not for you. That's also completely fine. Give it time, give it patience. I would advise whatever you choose, whoever you choose as a mentor, stick to it. Stick to it until you start seeing results. And that is the hardest part, because if you fall into the shiny object syndrome, it's going to take very long to see any results. Or I understand some of the MMT concept, but I find it hard to implement them. What should I do? This is important. So a lot on YouTube, and people think on YouTube, I give away everything. That's not true. And the concepts on YouTube that I give away and here on live stream are beautiful. Absolutely beautiful. They're beautiful. But where the MMT comes in, and whether it's a light or masterclass, where the MMT comes in is structure. So implementing those concepts are arguably more important than the concept itself. This is why the recent video that I made on uploaded yesterday is arguably the most important, because now you need to see what type of trader you want to be, first of all. Swing trader, scalper is going to be a little bit different the way you structure the concepts. But then you find or you use the 5 foundational levels and you start to structure and implement those concepts. There needs to be an 80% objective process behind it. And that's very important. And that's, so there's videos on it on YouTube as well, but that's very important. Would you say your YouTube is that much harder to get profitable from than MMT? I wouldn't say like that much harder, but I would say you need to figure a lot of things out on your own. And if you can do that, if you like doing that, then the YouTube is perfect. But if you think, well, this is going to take me, for example, a year or 2 years from the YouTube alone, that also can be done in 3 months or 6 months in the MMT, if that makes sense, because it's already laid out for you. You got a tattoo. I got a couple of tattoos. Yes. Yes. Multiple modules are quite important. Rumples. Yeah, multiple modules are quite important. Yeah. We're continuing on Discord. For this week, no, but for next week, we can take a look at it. If you do want, if you're interested and you're listening to this right now, link in the description of this live stream and you will find a Discord link as well. That is the free public Discord where I also am quite active. So if you're interested in that, then yeah. Yes, Elias, there will be a new playlist, a full playlist coming out on YouTube as well. Yeah. In 2025. Yes. Yes. Yeah, that's also a thing, gaming right there. It's also a thing. And that a lot of people, they stick around in the masterclass Discord because they just simply like the people that are there. They love the environment. They love to be around different profitable traders as well. So it's just, yeah, they like that. I can understand that. For sure. The world of fair value gaps. Yeah. The world of fair value gaps ended up being one video. But when we do get into the playlist, we'll dive into multiple again. No, I don't play basketball casually anymore, but I would love to. I do miss it. Sometimes I lay in bed at night and I think, I would like to play some basketball. I do miss it. I miss it. Love that. Or how difficult had your trading journey been? Never heard this part of your life. I don't want to brag or anything, but my trading journey, when I look back on it, was not easy. Definitely not easy. No. I went through a lot of struggles that every person goes through as well. But I was on the right path quite fast. I took in 2020, I believe, something around there. I took a challenge, FTMO challenge. I passed my first ever challenge to sketch you an ID. Now, when I look back at it, and in the MMT we do that sometimes, I take those stats, the data, etc. from it, and we look back at it and I just make fun of myself because I had no idea what I was doing essentially. But I felt the biggest struggle that I had, and what I'd like to emphasize on, the biggest struggle that I had is shiny object syndrome. So taking a loss, then think, well, it's the concepts that are not working or this. I needed from the beginning of my trading journey, this is why I emphasize on so much, everything is around probabilities. So even support and resistance, you can make it work if you understand probabilities. It's all about stacking up the probabilities. Nothing is 100% guaranteed. You're not doing it right or wrong. You're just following a trading plan that is backed up by probabilities. I needed to understand that. And if I understood that a lot earlier, then would have been great. But that's why I emphasize on that so much as well. And I think that is, but overall, was it very difficult? It was a struggle. Psychology-wise, I believe I struggled quite a lot as well. I think Reality Transurfing, that book, it's not necessarily a trading book, but it just transformed my mind, essentially. What is the most common beginner's mistake when it comes to finding a setup? So a lot of people that get into fair value gaps, they see any fair value gap, and it doesn't necessarily mean, like if we're talking general, let me show you. If we have, for example, let's say EU, a lot of people and that learn about fair value gaps, and I was in the exact same position when I learned about fair value gaps. To tell you a story, I thought those were the holy grail, and I thought, well, I'm just going to buy and sell at random points, always expecting price to return back into fair value gaps. For example, I had a love for fair value gaps. That's why I studied a lot. So here, a lot of people think when you have any fair value gap, they just buy or sell that fair value gap and it will be right. No, there needs to be somewhat of a probability backed edge right there, of course. We need to find the highest probability fair value gap. That's why we touch on those different third candles right there, because they all have different probabilities. So that is very important. The beginner mistake is that there's no process. There's just a fair value gap, or there's just an order block, whatever you're trading. There's just support or resistance, and let me just buy or sell this. No, you need, before you go into the chart, there's already something. Even before I open the chart, I already know what I'm going to look for. I have an idea of what I'm going to look for, if that makes sense. There's a process to it. There's not, I'm opening the chart, oh, fair value gap, let me buy. No. It doesn't necessarily work like that, if that makes sense. That's arguably one of the biggest beginner mistakes that I see. There's quite a lot beginner mistakes, I believe, but that's one of them. How much should we realistically target month on average? Because I've seen making 40 RR. What do you think the realistic target should be? 40 RR. Get it get it out of your mind. Get away with it. 40 RR. No, 40 RR, and just joking, of course, but 40 RR, no, it's very unrealistic. Even though I'm not saying it's impossible or anything like that, but you're not going to average 40 RR every single month. You need to get that out of your mind. To be in the top percentage, 3 RR in a month, you're already doing really good, if that makes sense. That is very important to understand. So lower your expectations by a lot. Very, very important. If you just have low expectations, then you're also not setting yourself up for disappointment, if that makes sense. So that's very important, very important. So realistically, focus on maybe 3 RR in a month first. Let's see if you can reach that. And from there, you can potentially build onto that, if that makes sense. And I also need you to understand that if you are a trader who is looking, because I really focus on in MT as well, really focus on the investors part and the prop firms part, etc. And the reason why I focus so much on that is because I believe that most people's problems, traders' problems, is not necessarily the RR you're making, it's the capital. And what I mean by that is it's better to try to make or to get 1 million capital and then make 10K from that, which is only 1%, than to try from 10K to 1 million. That's going to be a very difficult journey, even for your mental health, etc., etc. So capital is usually the problem of traders. That's why they think they need to go for high RR, etc., etc. No, you just need to slowly start scaling in that capital. Let that compound effect take place as well. That's important. So that's why I emphasize on it so much, that I think 40 RR, that shouldn't be a habit or a goal or anything like that. That just shows that you are lacking capital, to me, if that makes sense. And you also need to understand that investors, prop firms, etc., they don't like a lot of risk. If you take a lot of risk, that also means you're more susceptible to a lot of drawdown, a volatile equity curve. When that's the case, it's not good. Yeah, I know, Rumpels. Yeah. And again, it could be possible, right? It could be possible, but it won't be like that every month. How people on the FTMO leaderboard doing 50 to 60%. You need to understand leaderboards as well are there to throw you off. So when you see 50 to 60% on a leaderboard on FTMO, whatever it might be, you might think, hey, well, that is very interesting because I'm not doing good enough. Let me up my risk 4% right there and let me blow my account. It's just a psychology effect. Leaderboards are not there to help you or to encourage people to, hey, look how good everyone is doing. They're just to trap more people into doing worse, if that makes sense. Because you're going to, same thing if you open social media and you see someone doing better than you, supposedly, then you might think, well, I'm not doing good enough. Let me now start risking 4 to 5%. It's very important to understand right there. And how people achieve that is by risking a lot, which again, you don't see what's happening behind the scenes. There are a lot of traders, and I've seen this firsthand. There are a lot of traders that blow 10 accounts, and on that one account, they might get a nice payout, and they have to pay for all the previous accounts that they filled right there. That's very important. Yeah, nice, Jeff. Nice. Yeah. Nice, Jeff. Nice. Not a lot badminton. When I used to trade in 2023, it was a little bit higher. The reason for that is because I used a little bit of a different trading plan. 2024, so recently it has been even lower. And because of, again, I'm moving slowly up the ladder. And what I mean by that, that's also something I want to do personally as a personal choice, personal preference, whatever you want to call it, is I'm more so going from day trading. I don't day trade anymore really. And I'm more so going to swing trading to eventually I would like to go to position trading, etc. So yeah. So at this moment in time, to answer your question, very simply said, sorry for that rant, but to answer your question, usually around 1 to 2 trades a month. Yeah, you could argue that, Kakarot. Yeah. One thing I noticed is 1% of fund account are equivalent to 10% of real funds. Isn't it? Yeah, you could argue. You could argue that. Yeah. Because you only have drawdown to work with, essentially. So the percentages change. And usually, if you do manage to get A booked, then does not always mean, for example, that you have a 100K account. If you have a 100K account, no, they can just take the drawdown right there, the 10K, if that makes sense. Yes, live class every Sunday at 11 a.m. New York local time. Yes. Why don't you day trade? Day trading, so I moved to the other side of the world, South America, and I noticed that if I wake up, for example, it's already New York session has already begun, and we're already maybe an hour into New York session, let's say 8 a.m. So for me, day trading just didn't really work out anymore. So I wanted to look at more longer term positions where I wasn't really required or I wasn't really dependent on volatility, if that makes sense. So it's just the situation changed. Good luck, Crew Vision. Good luck. Good luck doing that consistently. Lost Art episode 2. It's a good one. It's a good one, actually. Yeah, swing trading is peace of mind. Yeah, depends on the person you ask. Some also say that it's even worse because you're constantly busy with it. But for me, it's also, I like it. Yep, I like it. Yep. You too, Milan. You too. Swing trading with MT concept doesn't change a lot. You just change time frames usually. And a good trading plan is a scalable trading plan, in my opinion. And what I mean by that is if you scalp and you have a trading plan, then that is scalable to also for swing trading, for example. Yes. News and fundamental is, in my opinion, very important when you're looking at position trading, when you're holding positions for months and months, for example. All right. Slowly going to end it here, team. Thank you, everyone. I saw a lot of interest as well in the MMT. If you're interested in the MMT, feel free to go to tradingmmt.com right there, or you can also reach out and send us an email at info@tradingmmt right there, and we can check if we can help you or not, and that's also perfectly fine right there if you want to. Here, right there. Thank you everyone for being here. Have a great day, have a great weekend. I'll see everyone at the next one, next Saturday, next Sunday, of course. And of course I'll see everyone in Discord as well, or even in MMT. All right, thank you everyone. Have a great one. Take care of yourself. Thank you.